On Thursday, I commented on how things are looking eerily like the late 1920s, where we had a similar set of reactions to a bubble and an economy and similar legislation and political policies. First, there was an anti-immigration act when immigration had been soaring for the most in history from 1924 onward, which first curbed immigration and then bam, it crashed into the Great Depression. There was the Smoot-Hartley Act, which I'll talk about early next week, which basically started trade wars, just like we're seeing now. And of course, in 1928, 1 year before the stock market top, the Fed started tightening monetary policy, just like they've been doing in the last year or so. So everything is lining up here. The million-dollar question is, when will this market top? And I'm down to two scenarios which I'm really going to cover in the October Irrational Economic Summit we have coming up in Austin, 25th to 27th. So come there if you can, and we'll be commenting all along. On Monday, I'm going to show one of the indicators that suggests to me it's going to come sooner than later, that we could see a stock market peak before the end of this year, called the Smart Money Index, going in the opposite direction of the markets. And so that's one. I've shown in recent articles, we have a big divergence between the emerging countries and China, which is, getting the bad end of this trade war with the U.S. They're down 20% recently, while the markets in the U.S. and developed countries keep going up. That's a major divergence that says, oh, we may still be growing with all our stimulus and tax cuts, but the world isn't. And is being adversely affected by a stronger dollar and interest rates here in the U.S. Now, there's the flip side of the argument. It says, and I've been saying this in recent months, hey, I mean, our first big set of cycles said we should have gotten a peak, very late 2017, early 2018. And the market did go exponential up, perfect bubble-looking top, final blow-off phase into January of 2018, January 26th top. And then it started to crash, but it's been sideways for this whole year thus far, normally. And again, my research has shown this clearly, which will only be temporary by our longer term analysis. We're coming into a major backlash against globalization, which Trump and Brexit are just the bare beginnings of. But again, the other scenarios is, again, we get one more rally in stocks after some further correction, maybe later this year, one more rally in the next year, and then we see a 1929 top. And boy, that'd be right on a very powerful 90-year cycle. That's our second set of cycles kicks in that we've been talking about in the last year or two. And in my book, 0 Hour, that would parallel the late 29 top and then the major crash into 32 and the low in the economy into 1933. I mean, so that's the latest I see this thing happening. So that's going to be the big debate for me and an analysis coming into our conference in late October. And again, we're going to keep you apprised, keep watching your economy and markets. If you're a subscriber, be sure to look at the 5-day forecast. On Monday, I am going to talk about the Smart Money Index. That's an important factor. And what I love about that index is it's not one like the advanced decline and some of these other indicators and the inverted yield curve that is also starting to happen and suggesting we're coming towards it. And everybody's watching those. Nobody's looking at this index. So again, we always try to find those secret clues as well. So again, we are getting close. Investors should be getting more cautious, but we have been telling people since this Trump election surprise in early November 2016, hey, we were in. You cannot argue with such pro-business policies and tax cuts, even though they're coming at the precise wrong time in the economy when corporations least need it and wages are going nowhere. And if you are going to have stimulus, it should go at consumers and not corporations. But bar all that, we're just keeping up with the political trends and trying to add them to the fundamental and continue to give you the best information on when this bubble's going to burst. And it will burst, and it will burst badly ultimately when it does. And again, we will keep you apprised.